A quiet revolution is taking place in Nepal's agricultural sector, and it has the power to completely reshape the country's industrial future.
Welcome. This is an analysis from Alpha Business Media. For decades, Nepal's agriculture has felt like a story of missed opportunities. But that's changing. Right now, a really profound shift is underway. And what's so interesting is that it's not being driven by the markets. It's being engineered through law. In this analysis, we're going to break down exactly how a new legal framework is set to tackle one of the country's oldest and toughest economic problems.
All right, here's how we're going to break this down. First, we'll look at the core problem, what we're calling Nepal's expensive silence. Then we'll get into the new legal architecture, what's in it for corporations, and how it helps small farmers. After that, we'll look at the two big paths forward to 2026, and we'll wrap up with the single most important ingredient for all of this to work: trust.
Now that phrase, expensive silence, it's not just some poetic flourish. It's very, very real. It's the sound of a brand new multi-billion rupee machine grinding to a halt, just sitting there silent because a truckload of wheat didn't show up. It's the sound of a whole production line frozen, waiting, always waiting for a steady supply of raw materials. That is the problem we're talking about.
So this isn't just a minor headache for businesses. This constant volatility in supply and price, it's the fundamental weakness, the crack in the foundation that's holding back Nepal's entire industrial ambition. I mean, how can you make long-term plans when you can't even count on next week's supplies? It makes real, sustainable growth almost impossible.
Okay, so what's the fix? Well, the really fascinating part here is that the solution isn't coming from the market. It's coming from regulation. There's this quiet but incredibly powerful shift happening right now. A whole new legal architecture is being built, and its one job is to finally build a bridge between Nepal's thousands of small fragmented farms and its large-scale industrial processors.
This new architecture really rests on three main pillars. The foundation is the Land Use Act from 2019. The vehicle, the thing that makes it all move, is a mechanism called Chaklabandi, which is basically land pooling. And finally, you have the Rulebook, a new Contract Farming Act. These three pieces work together to create that strong, functional bridge we were just talking about. So, let's talk about Chaklabandi, because this concept is absolutely pivotal. What it does is it lets a bunch of landowners pool their separate side-by-side plots of land into one big commercially managed farm. And here's the key part. They do this while all retaining their individual ownership. Nobody has to sell their ancestral land. Think about it from a corporation's point of view. Instead of trying to negotiate with 200 different farmers, they can now deal with one single entity that represents, say, a 100-hectare block. This just slashes the costs and headaches of making a deal and creates a clear line of accountability.
All right, let's switch hats for a second and think like a CFO, a chief financial officer. To really get why corporations are so interested in this, you have to understand their main goal. And it's not just about cutting costs. The real prize here is mastering predictability in their supply chain.
Relying on the open market, well, it's a completely reactive way to run a business. You're constantly guessing. It forces companies to tie up huge amounts of cash, of working capital, just hoarding inventory. And it leads to profits that are all over the place. Someone we talked to called it a cancer on the balance sheet. Now, compare that to contract farming. Suddenly you can do stable, long-term planning. You free up all that cash for growth. It fundamentally de-risks the entire business model.
So you might see a company paying, say, a 10 to 15% premium for their crops through a contract. But here's the thing. That's not an extra cost. You have to see it as a strategic investment. It's basically an insurance premium they're paying to protect themselves against the catastrophic risk of their whole supply chain collapsing. It's the price of stability.
Of course, none of this works unless it's a good deal for the farmers, right? And the value proposition for them is about so much more than just getting a guaranteed price. For a smallholder farmer, this is a gateway. It's a way into the modern agricultural value chain, a system that, for the most part, has always been closed off to them.
There are really three huge benefits for farmers here. First, they get access to things they never had before, like corporate agronomists and better technology. Second, it takes away a huge amount of market risk. A contract gives them a price floor, so even if there's a massive harvest and prices crash, they're protected. And third, and this is a big one, the contract itself becomes something they can take to a bank. It becomes a bankable asset. That gives them access to real, formal credit and a way out of those crippling, high-interest debt cycles.
Okay, so all the foundational pieces are falling into place. But let's be clear, success is not a sure thing. The next 3 to 5 years are an absolutely critical window.
The decisions that lawmakers and corporate leaders make right now are going to set Nepal on one of two very, very different paths.
So what are those two paths? Well, on one side, you have the accelerated path. This is where a strong law gets passed quickly, a few pioneering companies launch really successful projects, and then boom, investment surges in. Nepal becomes a real sourcing hub. But then there's the other path, the muddled middle. Here, the law gets watered down or stalls, agreements stay small and informal, and the country just keeps relying on imports, leaving all that agricultural potential on the table. The stakes for the whole economy couldn't be higher.
But, there's a wild card in all of this, a disruptive force that could actually solve one of the biggest challenges in this whole model and really push things onto that accelerated path.
And that wild card? It's agritech. Think about it. The biggest challenge here is managing potentially thousands of individual contracts. It's a logistical nightmare. This is where digital platforms come in. They can solve this missing middle problem. They can act as digital aggregators, onboarding farmers, using satellite data to monitor crops, automating payments. The first company that figures out how to build this system at scale, they won't just be building a business. They'll be creating a piece of critical national infrastructure.
So at the end of the day, you can have all the legal frameworks, the financial models, and the fancy tech you want, but it all comes down to one final and much more fundamental element, the human element.
Because here's the hard truth. The laws, the contracts, they're just tools. The history between farmers and big corporations in Nepal is, let's be honest, filled with suspicion. So if this first wave of contracts is seen as exploitative, if companies try to use their power unfairly, this entire model is going to collapse before it even gets off the ground.
And that brings us to our final question, our final thought. Will trust become Nepal's most valuable asset? Because beyond the laws and the balance sheets, the ultimate challenge here is cultural. The success of this whole agrarian revolution really hinges on whether its leaders can build an economy that's based not just on paper contracts, but on genuine, hard-won, lasting trust.